Okay, let's get started. Welcome back. This is episode 8 of the Think Travel Payments series. My name is Paul van Alphen, and I'll be joined today by 3 plus 1 guest, and I'll ask them to introduce themselves first. So let's start with the lady. Merusha, welcome.
Hi, Paul. Thanks so much. And good afternoon to your audience. Hi, everyone. I am Merusha Naidu, Global Head of Partnerships at Paymentology. Really happy to be here today to discuss B2B payments.
Okay, thank you so much for joining. Over to Koert. Koert, welcome.
Hey, good afternoon. Welcome for having me, Paul. Welcome to the audience as well. My name is Koert Grasveld. I'm Vice President at TerraPay, basically responsible for the whole commercial team, leading the payments and travel vertical on the B2B payment side. And as Merusha said, I'm very looking forward to discuss B2B payments on this panel.
Okay, thank you, Koert. And then we'll switch to Diego, all the way from Madrid. Diego, welcome.
Yeah, thank you both. Thank you for having me, and thank you everyone for joining. My name is Colmenar, and I'm part of the B2B travel payments team within Mastercard, and I specifically lead the travel intermediary engagement.
Okay, thank you, Diego. And we have a special guest. He's not on the cover slide, but Suby, great that you join us. Maybe a quick introduction from your side as well.
Thanks, Paul. I'm Suby Valluri, and I'm the Managing Director for Finmont. Today, I'll be discussing about stablecoins in B2B payment space.
Okay. And Finmont is also the sponsor for this series, so we'll also wrap up together at the end, because this is actually episode 8 of the first season and also the final one, but we'll get back to that in a minute. So let's get started. So much to do. Just a bit of housekeeping first. We're on Zoom, so there's a Q&A box. You can ask questions there. Please enter them into the box, and we'll cover them at the end of the session. The session will also be recorded and will be made available on the Open Pay YouTube channel. I think also on the Finmont channel, by the way. And we have also a dedicated page for the Think Travel Payments series on LinkedIn, where you can find announcements and also links to the recordings in case you would like to see it. Having said that, so we've come quite a long way. We've covered a lot of topics over the last 12, 14 months or so, and we're wrapping up with B2B payments, but we've covered, like you can see here, quite a bit. There's some overlap, obviously, and Koert, I think we already did a session with Anna and with James from Stripe on hospitality, but there's definitely a couple of aspects that we can highlight here as well. Let's continue. So today, we have about an hour, 45 minutes, 50 minutes, plus 10 minutes for Q&A. And these are the topics that we'd like to discuss. We'll set the scene first with some background on who are these travel intermediaries, these sellers and these suppliers, but also what historically, but also today and maybe also in the future, what forms of B2B payments are commonly used for that or are going to be used for that. We'll do a deep dive into probably the ones most spoken about, virtual cards, with Diego. But after that, we'll also have Merusha give us a sneak peek into what's happening in that black box. Now, how are these cards actually set up and managed and run? For me, coming from the acceptance side, that's a black box. So I'm really looking forward to that. I will take you through some of the B2B payments evolution on the airline side. Then we'll dig a bit into the hospitality side with the hotel B2B payments. And then Suby will wrap up with what's a very hot topic at the moment, stablecoins, anything digital currencies, cryptos, but definitely stablecoins have been all over the fintech news for the last couple of weeks. So we'll wrap up with that. So lots to discuss. Let's get started. First, some background. What kind of travel intermediaries are we talking about? For those who are not working in this space on a daily basis, it's a wide range, right? It's basically a seller paying a supplier, but that's not necessarily always a one-on-one relationship. It could be a seller paying multiple suppliers, but also it could be a sub-agent paying an agent, paying a supplier, for instance, a B2B2B setup. And that could be on the airline side with, for instance, ticket consolidators or aggregators, but also on the hospitality side, for instance, with bed banks. And next to that, obviously, there is a physical and a virtual version of it. Travel agent brick and mortar versus online, but also corporate versus leisure. Travel management companies, corporate travel agencies, but also tour operators. Purely on the leisure side, for instance, that play a role in there. So lots of flavors there. It's a global business. It's a massive business worldwide from a volume and from a value perspective. So there's a lot of things going on there, and there's also a lot of legacy, right? It's been happening for the last 50 years or so. Systems, standards, policies, procedures. There's a lot of things to regulations, a lot of things to consider. By the way, we're talking here for this B2B payments about the merchant model, and Diego will elaborate on that. But it's not where the payment details of the end customer are used to pay the supplier directly through the travel intermediary, but it's a decoupled process where there's a pay-in with the travel intermediary, who then in a second step determines how to pay the supplier, when to pay the supplier, and takes on that part of the role of the business. With that in mind, what forms of payment are used for that? It's a bit in the mix here. It's not in chronological order, but obviously there is the way to do it over bank rails, account to account. It could be a traditional SWIFT cross-border, typically for large amounts, very costly. It could also be fintech players like TerraPay, for instance, that have created their own ecosystem where they move money over account to account rails. It could be push, a bank transfer. It could also be pool, for instance, a direct debit. Cards are being used by corporates, for instance. If you have a card issued to a individual employee or to the company, but also virtual cards, and we'll dig into that in a bit. There's a whole evolution of wallets, mobile wallets, e-wallets, global ones, local ones. Koert will cover that in his session. Suby will take us through what's happening with digital currencies, and then we're zooming in on stablecoin. Traditionally, and when I look at the world map, I would look at, for instance, the US. Sending a check in the mail was used in the past and still used in some cases. Cash, but then the IATA form of cash, so a settlement system between travel agencies and airlines, for instance. Invoicing in the hotel industry, but also if there's any form of settlement between for instance, online travel agencies and for instance, a company that provides transportation from the airport to the city, for instance, or other forms of ancillaries. It could also be a prepaid deposit where money is in an account, which is then used to move money to the supplier. So quite a lot of variation there, and some of them have been around for a long time. Some of them are coming up, and some of them play a more important role than others. But we'll cover most of them in the next hour or so. So what I said is that key to this session is that we're looking at it from a merchant of record model where the travel intermediary is responsible for accepting the payments. And Diego, this is where you come in, because this is it's very much a growing model, but it also differs, I think, per region, and maybe also if it's corporate versus leisure. But can you take us through this slide in the next slide, please?
Yeah, absolutely. So I think Paul have been summarizing the key methods of payment that we see whenever we are talking about B2B flows in the travel space, but we wanted to take maybe a more holistic view and describe the different flows that we see when a booking is happening, right? And basically, we have two types of bookings or booking flows in the industry, right? So the first one is what we call direct channel. So at the end, this would be the flows where a traveler is going directly to the supplier side. So for example, when I, as a traveler, go to an airline and book a flight in there. So that would be direct channel, and I would be paying directly to the supplier, the airline in this case. Now, we have a second flow, which is basically what we call the intermediated flow, which is mainly whenever we have a travel intermediary in the middle, right? So the different types of travel intermediaries that have been described by Paul that are facilitating the connection between the travelers and the suppliers. So even in this scenario, we have two subflows, I would say, right? So the first one is what we call pass-through, which is basically taking, or the travel intermediary will take the traveler payment details, so the credit card, for example, and will be using those payment details, so credit card, whatever, to pay to the supplier. So at the end, for example, if I am booking with a travel agency and I'm booking for a whole package, what will happen in this case is that I, as a traveler, will see in my statement one charge for the airline, one charge for the hotel, and one charge for the travel agency fee. Okay, that will be the pass-through model, and then we have a second model, which is the merchant of record model that Paul was mentioning here, right? And the main difference here is that the travel intermediary will be responsible for taking the whole payment from the traveler, so will be acting as merchant of record in that first transaction, and then will be responsible for paying to the suppliers in a second leg for that transaction. And it is in this second leg, so when the travel intermediary, travel agency, OTA, whatever, is paying to the supplier, where all these methods of payment that Paul was describing before come into the equation, right? I mean, here we may ask ourselves why it doesn't make sense for a travel agency to become merchant of record. I mean, obviously, we see multiple benefits, right? So on the paying side, the key benefit is that the travel intermediary will be owning the overall traveler experience, right? So at the end, there is more room for cross-selling. They own the whole experience. So at the end, we are creating additional loyalty, and it is, I mean, the travel intermediary is owning the whole traveler experience, including the payment, meaning that they will be able to take action towards that payment in case it is needed, right? And then on the payout side, obviously, they have the choice in order to optimize what is the preferred method of payment that they will be using in order to pay to suppliers. And at the end, they are basically optimizing not only from a finance standpoint, but also from a process standpoint, right? So that's why this is a model that we see growing. I mean, obviously, it varies per region. I mean, we see regions like North America, for example, that have been traditionally operating under pass-through, but even in those regions, we see merchant of record model. But all in all, it's I mean, it's a model that is growing, right?
Okay, so let's then go to one of these forms of payment that I described, and obviously that's in Mastercard's domain, is the use of virtual cards, but it's been around for a while. But maybe you can give some background on how do virtual cards numbers work and how they used in this particular scenario.
Yeah, of course. So at the end, I mean, everything that I have been saying so far, it's basically, I mean, I will be focusing now on these specific B2B flows when travel intermediaries are paying to suppliers in the merchant of record model. And obviously, one of the key payment options that we see in these flows is VCNs, right? So at the end, this will be, I would say, credit cards that are based on a virtual, I mean, that are provided in a virtual fashion. So at the end, we see two layers here, right? So first layer is the virtual credit card technology itself, and then on top of that, we have credit cards, meaning that, I mean, if I see that from a Mastercard standpoint, for example, we can see any sort of product that Mastercard is offering that is being offered in a virtual way, right? So at the end, there is no physical card, and in order to exchange for the payment, there is a unique number that is created for that specific transaction, right? If I think about this method of payment, what I wanted to deep dive is basically on the key advantages that we see for it, right? And even if you see many of them here in the slide, probably I would summarize those in three buckets, right? So the first one is financial advantages. So at the end, the fact that I mean, a cardholder, in this case a travel intermediary, is using let's say a credit card mechanism in order to fulfill the payment to the suppliers, means that there will be financial advantages. First, they will have an extended credit window in case they are using credit. That's number one. Obviously, they have an extended muscle in terms of purchasing content from the supplier. So at the end, the fact that they have credit allows a travel intermediary to purchase additional content from the supplier. So again, additional financial modeling muscle, sorry. And then obviously, I mean, if we are talking specifically about airline flows, as Paul was mentioning in one of the the traditional methods of payment that we have seen in these flows is IATA BSP Cash, but this kind of method of payment require for travel intermediaries to put some sort of guarantees in a fund towards IATA, for example, right? So at the end, by using VCNs, you can potentially remove this kind of requirements. And obviously, the fact and finalizing with these financial advantages, one of the things that we see is that obviously the usage of these methods of payment allow travel intermediaries to create let's say, additional revenue streams, right? Because they can get potential rebates, etc., right? So that will be the financial bucket. Then the second bucket that I would highlight, probably related to the fact that here we have unique credit card numbers that generated per payment, is the fact that it comes with additional efficiency in terms of reconciliation, right? So at the end, the fact that we have one specific VCN number for one specific payment eases the reconciliation processes, both on the cardholder and the supplier side, right? So that will be, operational efficiency as a whole will be benefit number 2. And then the last one that I would like to highlight in terms of benefits is security, right? And when I say security, probably I would highlight 2 things, right? So the first one is the fact that virtual credit card technology in itself provides with a secure channel for travel intermediaries to pay to suppliers. So at the end, the fact that we have a unique credit card that is generated for that specific scenario, the fact that we can include controls in that VCN, obviously makes it an extremely secure payment. And then on the other hand, when highlighting security, it's also important to highlight the fact that travel intermediaries are paying with a VCN in this kind of flows. This payment mechanism by itself is giving them what we call back-to-back security, right? So at the end, if something happens with the suppliers, imagine, for example, worst case scenario, like a default, for example, the cardholder, in this case, the travel intermediary, will be protected, right? So at the end, as you can see here, multiple benefits for using VCNs in these kind of flows. And one thing that I would highlight, probably, in order to, and maybe basically to wrap up this piece, is the fact that in general, and this is something I have been doing in the last 5 minutes, we tend to focus on the benefits that we see for the cardholders, so in this case, the travel intermediaries. But if we think about these kind of advantages, it's something that is fully beneficial as well for the suppliers, right? Because at the end, the fact that these credit windows can be extended, or the VCNs are providing with additional cash flow to the cardholders, means that this can be potentially passed to the suppliers, so at the end benefit the suppliers, and they are also benefit obviously from the efficiency in the process and also from the security, right? So the most security that we have in the payment flows, it's obviously also benefiting to the suppliers, right? So just wanted to highlight this, because in general, whenever we think about this kind of method of payment, on the supplier side, they are normally perceived as a cost. And I think one key thing that we need to highlight here is the fact that this is not a, let's say, a unique factor. Obviously cost is something critical, but we need to take more variables into consideration.
Yeah, that's what I will do later on as well, where we talk about the value exchange and what's in it for the supplier, for instance, the airline, but also obviously what's in it for the travel intermediary, the seller, and that's I think is quite obvious, but there is a value exchange, and I think that should be considered as well. And these kind of events are good for educating, all the stakeholders in the ecosystem about, what's happening here and how can they benefit from it. This more than meets the eye sometimes. Okay, so thank you so much, Diego. Let's continue. And I think it's a nice introduction to the next piece, Merusha. And what you see here in the middle, I'll explain a little bit about that, is my effort, my attempt, to try to understand the roles and responsibility in that black box that happens upstream. I'm coming from the acceptance side, so it's Koert, by the way, we used to be colleagues. And in the end, what we were seeing on the acceptance side is basically the end result of a lot of hard work that happens upstream. But we see 16 digits, an expiration date and a CVC code, etc. But that's obviously the end result, and what exactly what kind of value was put into that card, towards the card holder, for instance. We were not seeing that. But Merusha, if I can hand it over to you, paymentology obviously is very active in this space, but but first of all, maybe you can highlight a little bit, who are the different stakeholders in this process, upstream process, as I call it, and definitely then zoom in on exactly where does paymentology, live in that space, and tell us a bit more about the background of the company.
Perfect. So I'll start with the background of the company because we'll feed nicely into how we go through the different players in the value chain. So first, Paymentology is a global issuer processor. We help customers like travel aggregators who want to enable the merchant of record model, really get into the issuing space. And what we do is we take all of the payment complexities away from these travel aggregators. We really help them to start to issue VCNs, to be able to pay their sellers in an easy way. So when we talk about demystifying payments and each of the partners in the actual value chain, Paymentology plays a very important role because what we do is we actually connect all of these OTAs to the schemes. And that's really where the optimization begins, right? Because what we're able to do is we're able to very simply, and if we look at the merchant of record model, and I'll try and use Diego's flow to explain it in an easy way. Basically, customer goes onto a travel aggregator website, they book their hotel booking or airline. In the background, what happens is the travel aggregator actually connects to Paymentology, either using our APIs, our SDKs, or our micro front-end services, and they're able to say, okay, Paymentology, for this specific booking reference number, I want to create a virtual card. That virtual card needs to be loaded with the exact amount for that booking in the exact currency that the booking was made in. And we need those card details to be securely sent either directly to the seller or back to the travel aggregator. So as soon as we get that information on Paymentology side, we very quickly create a virtual card number under 300 milliseconds. We then send the card details, like I said, either to the seller or to the OTA. Now, once that virtual card is created, that virtual card can be used as soon as the customer checks into that hotel. So for example, let's say I've booked a hotel to go to Madrid for Koert's wedding, and I'm then going to, I've booked my hotel, but on check-in, what happens is the hotel actually authorizes the virtual card, basically saying, okay, Merusha has checked in. On Paymentology side, we then receive the authorization. We check the balance to make sure that it's for the right amount. We then approve that transaction. Now, in the background, what's happening is the hotel now gets confirmation that they are going to be paid for that booking, right? A few days later, after we've enjoyed the wedding, we then, I then check out of the hotel. At that stage, the hotel then settles or completes that payment, right? And so in the background, what's happening is the hotel is then saying to MasterCard, hey, MasterCard, we would now like to get paid for this transaction. Okay. Now, when you look at the benefit of a virtual card in this B2B, merchant of record model, one of the first benefits is simplification of fund movement and operational efficiency, right? So immediately what happens is MasterCard then settles with the hotel. So that's the first leg of money movement. The second leg of money movement is MasterCard will then go to the OTA or the OTA's bin sponsor to collect funds. But essentially what MasterCard's done is MasterCard has efficiently moved the funds from one bank account directly to the hotel. So when you look at the, from the seller side of things, they're getting immediate payments. They don't have to wait for payments to be made or delayed payments. So it's a much more efficient way of receiving the payment from the seller side. Now, if you go all the way back to the OTA or the travel aggregator, on their side, what we've really done is we've created operational efficiency, like Diego was saying, by linking one booking to one virtual card, which has one booking reference. That booking reference is then used throughout the journey. So from the time I book my hotel to the time that the settlement is made and funds are moved, that same booking reference is used throughout the journey. So the OTA can very easily say, okay, booking was made, Merusha checked in, Merusha checked out, and the hotel has been paid. A further benefit of, these B2B payments and using a virtual card is that the OTAs now have additional services post the actual stay. For example, we often see that many hotels overcharge for things like room service, hospitality, I've got my clothes on, whatever the case is, right? Now, these OTAs now have the option of chargeback services or dispute processes, which can help them to get money back for additional services in a much easier, more controlled way. So the virtual card adds, like Diego said, three main benefits. Firstly is operational efficiency around reconciliation. Secondly, revenue optimization because they're getting, hotels are getting paid immediately. Like Diego said as well, in many cases they use credit, so we're able to pre-fund or offer. They're able to offer hotel rooms at a cheaper rate based on like block bookings. The third is also looking at ease of fund movement and sorry, the last one was, of course, security. Now, the one thing I want to mention, and I think Diego didn't mention this, but I'm going to mention this on his behalf, are additional services that the schemes offer, like wholesale products, where the OTAs are able to benefit from better interchange rates, things like ICCP, where they're able to use different hierarchies for corporate card programs. So there's a lot embedded in, how we create efficiencies throughout the journey. Okay. I very quickly just want to run through, the different roles here. So when we look at obviously the scheme side of things, the scheme actually creates all of the rails for fund movement. A program manager, or in this case, let's say an OTA, they control the program. They are responsible for managing the payment in from the customer. They're managing, the request to create a virtual card. They are onboarding all of their partners. So they really define the program parameters, right? Then when you get to the issuer processor, let's say in this case, paymentology, our role is really to take on all of the payment complexities. Our role is to manage all of the security protocols around how a virtual card is created. Things like PCI compliance, or, how do we transmit the card data securely to either the hotel, airline, or the OTA. So we cover all of those payment complexities and just give our customers very, very simple APIs or SDKs, which allow them to create the virtual card. We also provide all of the end-of-day reports, so they again have operational efficiency around the full end-to-end reconciliation process. And I'll give you an example. We have a customer, and obviously given Paymentology's global presence, we issue across Europe, the UK, Middle East, Africa, Latin America, and Asia Pacific. So what we're able to do is really give these OTAs access to the global market. And so we can issue a virtual card in as many countries or currencies that the OTA would like to. For example, we have one customer, they issue in about 45 currencies, they settle in 39 currencies. We service over 250,000 merchants globally, right? And so there's a need to make sure that the entire reconciliation process is seamless, that they can actually make sure that they have those funds available in their settlement accounts on a daily basis. And so we really streamline that entire process. Now, when you look at the BIN sponsor in this model, an OTA could choose to use a BIN sponsor, which is a licensed entity where they leverage the license of a third party. In many cases, what we see is OTAs, again, while aiming to create revenue optimization, they usually want to become a BIN sponsor, a principal member, rather than using a BIN sponsor. But again, on Paymentology side, we support both models, whether you want to start off with a BIN sponsor and then move to, getting your own principal membership. Okay.
And Merusha, maybe to ask a question about that. If I'm right, and again, this is definitely not my territory, but in the EU, on the PSD, a lot of things are like handed over to fintechs, right? And they don't necessarily have to be a bank to be able to do that. But I think in other regions, as a travel technology or a financial technology provider, you need always to team up with a bank. Is that right?
So a BIN sponsor may be a bank or another financial institution. So we do get, some fintechs who are large enough who actually apply for their own principal membership or license from the states. right? And obviously they have to check a couple of boxes, things like what are the AML policies, what are the KYC policies, that kind of thing. But it is possible for a bank to, I mean, it is possible for a fintech who is not a bank to become a licensed holder, a
Okay.
licensed entity. Yeah. Okay. And then
Okay.
just looking at the final piece, like we said, orchestrator, it's really looking at, how do we close things off and the business rules around it. So when we look at the business rules specifically around B2B payments and this merchant of record solution, we're able to put in a lot of control. And I think that's really the beauty of the program, because what you want to be able to do is you want to be able to say, okay, I want a virtual card that's going to work everywhere. But at the same time, I want to have sufficient controls to make sure that it is used at, only the hotel that the booking was made at. It is used only for the amount and the currency that the booking was made in. And so on paymentology side, we have our rule engine, which helps customers to define exactly how that transaction can take place. So it gives the OTAs a lot of control. And when you look at the controls are there for two reasons. The first one is obviously fraud and security, because we want to make sure that we are de-risking these programs as much as possible. Okay. And the second reason for it is, again, revenue optimization, because they want the cards to be used in a specific currency so that they can leverage, and so same currency and same, for example, MCC code, so that they can leverage the higher interchange rates. So there's many reasons, but those are the two biggest ones.
Okay.
Yeah.
Great. And in the interest of time, I would like to just give you the opportunity, because as people know me, probably I like to visualize also the vendor landscapes, but you're in a separate segment for me, and maybe just and you're a partner manager, maybe also important to know. But maybe you can give us a bit of feel of where does paymentology fit into the vendor landscape, and who are, for instance, some of these parties that you work with.
Absolutely. So I always say in partnerships, you can never do it on your own. And with, on paymentology side, we believe in doing things with excellence, but we can't build it all ourselves. It's just not possible. So what we do is we partner with best-in-class ecosystem players who help us complete the ecosystem. So obviously we'll start off with schemes. We work with both schemes globally, right? We also work with BIN sponsors throughout all of our different regions, because again, you have many fintechs who don't want to become a license holder and they need a partner to work with. And so we work with BIN sponsors globally. We also work with partners who, like I said, complete the value chain. So for example, core banking partners. Now, with core banking partners, they're able to help these OTAs by creating a ledger platform. So let's say, for example, and this is actually an example that we have right now, is you may say, okay, well, it's the Hilton Group, right? And so our OTAs may partner with the Hilton Group, but it's very difficult to have just one card linked to a booking, because they do, millions of dollars worth of bookings every single day, right? And so what we do is we're able to create wallets for them. And on the wallet side, they can say, okay, for these 1,000 bookings, here is the payment loaded into a wallet. So core banking players are starting now to get more involved in the OTA space, and they're actually creating a lot more flexibility around what the OTAs can do, how many bookings they can take on, and when those bookings actually get released. So that's one partner. We also have partners like Aparta for 3DS, because in many cases, the hotel partners use their own e-commerce portals to actually facilitate the payment. And in that case, for security reasons, we still implement 3D Secure. So we have a partner. So if you look at the middle box, those are internal paymentology connections. We have direct integrations and pre-integrations with all of these partners. These partners sit within our world. Outside of our world, we also work with, like I said, BIN sponsors. Perso bureaus is another one. And I know that we're talking about virtual cards, but for some of our OTA partners, they actually have hotels in very remote locations. And so virtual cards are not accepted yet. So in some, areas, and I think one that we often see is Indonesia. We have certain parts of Latin America. And so there we actually have to create physical cards, which we send to these boutique hotels and small airlines. And each time a booking is made, their card is topped up with the booking amount. So that the actual hotels have a physical card so they can still process payment. Yeah.
I think I remember how this all started when hotels had like from their OTAs they had like a number of cards at the check-in desk, and when the guest checked out, they would then just swipe the card. So thank you so much, Marusha. Very interesting to have a look in that black box, and also to see how established these global card rails are, and what's already in place to make that work across all channels around the world every day, every minute, right? So thank you for that. So let's continue with this piece, and I'll just quickly elaborate a couple of things here because it came up already. I think Diego already mentioned here that historically on the travel agencies settling or paying the airlines, IATA settlement system between the accredited travel agents on one side and the airlines on the member airlines on the other side on a weekly, bi-weekly basis. Many to one to many. So all agencies basically make one settlement to the local clearinghouse, who then pays the individual airlines. So that there is a very, let's say, consolidated money flow happening there. That's what's started already. I think the first one in 1971 or something like that in Japan, if I remember it correctly. Since then, obviously, a lot of things happened. Cards were introduced to also pay with the customer card to pay the airline directly, the pass-through model that Diego referred to. And since probably already somewhere in the 2005 or 10s, more and more also virtual cards were being used first under the radar, and more also, especially now that there's a policy from IATA as well, also above the radar to use, in this decoupled model, in this merge of record model, the agent's own card. It could be a visual card, but typically it's a virtual card, to then pay the airlines over their existing card processing rails. There's been other initiatives as well around using wallets, for instance, also to try to find ways to bring account-to-account payments into it, but then trick the system thinking it's a card payment. And we'll wrap up later with Suby as well. What's going to be the role moving forward? Now, looking ahead of digital currencies, for instance, stablecoins in this model. IATA is already doing some work on that, for instance, in China, and there's definitely developments coming in that space as well. Also here, the cards team were around already in the early 50s, 60s, and they play a very important role, and they will keep on playing that as well, moving forward. Jumping to an even more complicated diagram that I made, but I'm definitely not going to go into a lot of detail, but I wanted to use this as introduction to Koert. Koert, I know that with TerraPay, you've been heavily focusing on the hospitality industry, and also to find yourself, for instance, as part of the Head 9 initiative, find yourself a role in this money move between the travel agency, but sometimes also with a party in the middle, like an aggregator, like a bed bank, and then to the hotel group in some cases, and then to the end recipient, the individual hotel, which might have the same brand on the roof, but it's not necessarily the same company, it's not owned by the same people. So maybe Koert, can you maybe do a very quick introduction to hotel payments overall, and then we'll move into TerraPay?
Yeah, absolutely. So just to give some highlights, right? Because I'm very well familiar with, and I'm very happy to see that virtual cards is very well adopted in the industry. But there's always the what if, right? The what if there's no virtual card acceptance, or there is that gap of virtual card acceptance. We've learned, and numbers have shown it, that there's close to 35% of the business is still not accepting a virtual card. What to do then? And that's basically where we as TerraPay jumped in to basically fill that gap, to still provide an alternative to this very, very well adopted payment method. What you've seen, and I very much like the slide, although it's very complex, but as Paul and I worked for quite some years, I'm very familiar with it now. For the hoteliers, there's always a challenge, like either they have a central collection of funds for global hotel chains, for example, from the brand.com business or the online travel agency side, or just alternative ways in order to pay their suppliers, saying, hey, I always have to fall back to like a traditional banking rails, right? Which is, we've learned, it's swift, it's a bit outdated, it's slow, it's relatively expensive. So we've learned that players like a TerraPay, we jumped into that side saying, hey, how can we further optimize that bit of the money flow and basically help these players out to have next to virtual cards a relatively cheap, efficient, and fast alternative to these payment methods. And we actually took it one step further. Is like there's always that bank account to bank account payment, but there are many regions out there like Southeast Asia, like Africa, where there's a very high penetration of mobile wallets. So these people might not even have a bank account or might not even have any financial mechanisms in place in order to collect funds. They just say, here's my mobile number, just move funds to my wallets instead. And that's what we have actually been doing. We spent almost 12 years building a payment infrastructure in order to move money very efficiently from player one to player two for just a fraction of the cost. There are some numbers here. I'm not pitching it. It basically comes down as like the rails basically allows to do an instant cross-border payment from UK to Hong Kong, delivery under 30 seconds for a fraction of the cost. Why a fraction of the cost? And that's mainly because of the dirty work that we've been doing. We've been building these direct integrations with these banks in these 155 countries. So no third party on the rails. The $100 that you send from your bank account to the supplier is also the $100 that he or she would receive, simply because there is no intermediaries, banks that are charging these hidden fees to basically make their fair share of the money ecosystem itself. We do it for B2B, B2C, and P2P. And I wanted to highlight like a couple of use cases out there which are very relevant for the industry itself, and also to challenge us as being TerraPay to basically use to basically prove the efficiency and the value of the rails that we've built. And from that perspective, I want to highlight the consumer payments, because we all know, as we all travel, at least the majority of these panelists they're traveling most likely more often than I do. As soon as there's any flight disruption or anything, that's where the struggling starts, right, from the individual traveler. You want to basically get compensated. You have to wait because all these airlines, they basically have to basically prove all these kind of things, have to double check what went wrong, what are the official reasons, and then the whole conversation starts. Where we're doing now some interesting pilots is saying we can challenge these insurance companies, saying, hey, these people are on the ground traveling, they're at the airport stuck for a couple of hours. We can do these instant payouts or fundings to these individuals at the airport to basically being able to just pay for their food and drinks or their accommodation if required, without doing the pre-funding themselves. We've seen that 95% of the transactions that we're doing, there's a delivery within 28 seconds. So that gives us a fair window to do these kind of compensations for the airlines itself. I highlighted the virtual card acceptance gap. Various reasons for that. Either we talk about a single property owner who doesn't have the financial knowledge or wants to basically maintain an acquiring relationship, or country regulations do not allow to accept the virtual card itself. Therefore, you always have to fall back to these traditional banking rails. What we can basically offer is these alternatives to these players, saying, hey, you do a bank transfer, it still takes 3 to 5 days for this receiver to receive the funds. You can eliminate these 3 to 5 days, and also the $25 to $35 that it would average cost to do these kind of bank transfers. We can reduce that by 75 to 90%, depending on the regions where you're basically sending these funds to. So it's a very efficient alternative next to virtual cards, or a complementary solution next to virtual cards to have like 100% acceptance of your B2B payments itself.
I think when we did a session earlier together, you gave an example of these. I think the world is your marketplace, right? So these single property owners, people that are on an Airbnb like style, like website. I mean, they have basically now access to the whole world from sellers from around the world, right? So, but they don't necessarily have the technical financial infrastructure. So, but also they maybe want to keep money in their local mobile wallet to then pay their gardener or their grocery for their groceries or whatever, or for their eggs for the B&B, right? So I think that's also the next level where you'll very localize the payouts to these, in a lot of cases, like individually owned or small properties which don't have the the IT support that the large chains have, right?
Yeah, it's the IT support. What we hear most often, and then you talk about the Airbnb likes of the companies, but also the Get Your guides who have these local tourist guides on the ground, right? It's not just the infrastructure, it's mainly the knowledge as well, the understanding of how to basically acquire the funds from the card. And then, as you said, like they have all these local payments that they need to do. If they can be funded on the wallet, they don't need to do these top up of their wallets in order to get like the second or third leg of the payment to the other suppliers locally. So that's the second alternative there. And as we all know, travel is running on a razor thin margin, right? So if you can bring down these bank transfer fees from, let's say, $30 back to $2, it's a significant saving. While you're also giving the cash flow improvement by basically being able to move these funds instantly, basically same day to the bank account or the mobile wallet of the property holder or the tourist guide or the taxi driver. It's a big win for them because they're not that cash rich, right? And
Okay.
just to finish up with that one, Paul, is also with the central collections for those Hiltons and the Marriotts, right? Where they're either from a brand.com, it's all being collected centrally, and then they have to disperse it to the individual properties. From an OTA perspective, they're really already paying like a significant portion of the commission. Brand.com, they eliminate that part, but they still have this fee for these global payments. So it's a very strong alternative next to the virtual card proposition itself.
Okay. Well, thanks so much for that. And I think what I've learned over the last couple of years is there's so much to do. There's so many use cases in B2B, and there's so much room for improvement. So it's an interesting space to be in. Thank you, Koert. Let's start wrapping up. And just wanted to, I'm going into the details here, but I think I already touched a little bit on it when Diego was on. For me, whenever it's B2B payments, no, there's obviously two sides to it. There is the travel intermediary side and let's say the supplier side, but both should be able to benefit from it. Both they should come to a middle ground where whatever form of B2B payment is used has value for both sides, and it starts with realizing or learning about what are these values and what are the true costs and comparing apples to apples. But there's a sales component to it. There is a protection component to it. There's a data security or fraud component to it. But there is, work being done on one side, which comes, with a value for the other side. I think take your time to look at it from both sides. Step into the shoes of the other side and try to understand their position as well, and find a middle ground, which then is beneficial to both parties. That's pretty much what I'm saying here. So keep that in mind. Finally, and so I can introduce my surprise guest, my mystery guest. So Suby, we can't talk about B2B payments without talking about innovation in B2B payments, and a lot of that is recently has exploded pretty much. The attention to stablecoins. So maybe you can do a very quick introduction to Finmont, but definitely highlight how you see stablecoins, but also the work you've done with the Camino network, with Chain for Travel, and with Lufthansa Group about when it comes to your pilot on moving money from seller to supplier in exotic locations, with the use of stablecoins. So over to you, Suby.
Sure. Thanks, Paul. So basically, Finmont is a payment orchestration platform designed specifically for travel merchants. So as a payment orchestration platform, we are connected with multiple virtual card providers, account-to-account solution providers. But still, there is a gap in terms of how we mitigate the either currency exchange risk or how to move the money quickly in some markets, especially some emerging economies and where their currency is traded very thinly in forex markets. So that's what we found a gap last year, and then we acted on that. And we said stablecoins could be the solution. So we partnered with Lufthansa and also with Camino Network in terms of Web3 side. So when we talk about stable coins, let's say what are the real benefits of using a stable coin? The first thing is, as the name suggests, it's basically pegged to either US dollar or euros, some sort of stable currencies. And then these networks, compared to, let's say, wire-based transactions, they operate 24/7. So basically, there is no delay in the settlement time. For example, if you do a Swift type of payment, it may take 3 days. And also there are few intermediaries. When we talk about the current banking systems, there is something called as correspondent banking. So there are number of banks that plays role as an intermediaries if money needs to move from point A to point B. So in stablecoin networks, that is basically minimized. That means the total payment cost will be much lower. And then as we get the money immediately, there is an enhanced liquidity, which is very important in the travel industry. And then we can add on top of that, we can also do some sort of smart contract automation. That means it's basically a set of rules when you want to pay your suppliers. So these are all the basic advantages of stable coins. Then we talk specifically about travel industry itself. So it reduces the currency fluctuation risk because there are some currencies where the moment you get paid and the moment the money reaches to your bank account, there could be already some sort of decrease in the currency valuation due to inflation or on any other factors. So you ended up losing the money. And then, and also there could be a non-payment risk in some cases, which can be reduced with stable coins if you employ some strategies like having a wallet, having your own branded wallet, where it's kind of a prepaid wallet. And there is also clear payment visibility because there are few intermediaries involved here. So we know at every stage where the payment is. And again, as these are digital currencies, so it is Web3 ready, so you can connect with decentralized or blockchain-based networks, and they are native to that. And currently, we implemented this use case with airlines and travel aggregators, and predominantly as a low-hanging fruit to solve the currency fluctuation risk and also to move money faster. Because in some countries, it's even hard. Okay, you might sell some product, but you can't move the money due to, Reserve Bank controls or something like that. So that's the solution we have implemented last year. And yeah, those are the basic advantages and first kind of product
Okay.
in terms of first use case.
Yeah, and Suby, so as always in life, new things have pros and cons, advantages and disadvantages, or challenges, or maybe still needs to grow. So this is a relatively new concept. It creates a lot of attention at the moment. How do you see the path forward? I mean, how will this scale, you think?
Yes. As for everything, there will be a limitation. I think adoption will be a limitation. And also, as we are working on some exotic markets where we need to make sure that there is some sort of crypto exchange present in that market, because otherwise we can't really convert from fiat to crypto. So that could be the limitation. But the interesting fact is, in all those markets, since their currency is fluctuating a lot, they already have all these exchanges in place. That's the basic use case for crypto itself. And then it's just a matter of I think educate. I mean, technology is ready already. I mean, technology is there. We can use it, but then it's also about to make sure all the backend systems work with all these kind of payments, because the travel backend systems are not designed for this. So that could be the point one needs to concentrate on. And it's just a matter of also education. It takes some time to get the matter across. And we have seen recently how Stripe is highly focused on stable coins, for example. So it's happening.
It's becoming more mainstream, definitely. And
Yes.
One other, but it's not B2B related, by the way, development I recently noticed is that where the use of wallets to pay, as a customer, a supplier directly, has not really taken off. It's very fragmented, and many wallets is not very easy to use. There are many currencies. Acceptance is currently low, but there you see actually card schemes and crypto exchanges teaming up by actually connecting exchange accounts to crypto debit cards, and then all of a sudden, giving it access to all the the acceptance points around the world, across channels. And so, yeah, there's definitely a lot of movement. So that's quite interesting to see. There's way more detail. You can probably fill a whole week with that, but I just wanted to make sure that we touch the service a little bit on this, and that definitely something worthwhile keeping an eye on. I still see some questions coming in. Let me just park those for a bit and go to just a quick notification that normally I do latest industry news here. I didn't do that this time because in the meantime, I've started with a travel fintech newsletter that I publish monthly. I would just like to refer the audience to my newsletter, which we have now 2, and there's another one for May coming up. So there's so much news that it's hard to fill this block with that. So having said that, then we can go to the Q&A because we have a couple of minutes left. And I'll start with the last question. Suhail asked to Finmont, when do you think other cryptos like Bitcoin, Ethereum, LTC, whatever that may be, payments will become more mainstream amongst merchants as an accepted form of payment and also in B2B flows?
I mean, at the moment, some airlines are accepting crypto payments, but the difference is they're not holding the cryptocurrency. They're just using it as a payment method. That means they immediately convert into fiat currency and store the value. Because the problem with cryptocurrencies is that their value changes so quickly. So that is also one reason why in travel industry, stablecoins are more suitable, as the margins are very thin. So
yeah, I definitely see, and you already elaborated on some of the use cases, especially in, I would say, emerging markets or markets that struggle with currency control or with inflation. I think that's probably the low-hanging fruit. That's where the instant results can be booked. I think for mature markets, using a stable coin versus a regular currency, knowing that, for instance, you get your salary, in regular currency, in fiat currency, I must say, yeah, it's maybe not the first stop, but. Okay, so let's see what else we have. And I have one question from Phoebe. And I'm guessing here it's for Koert. What is the average settlement timelines you are offering to your merchants?
Very relevant question. What we see and what we've seen in the systems as well is like close to 95% of the transactions being delivered under 28 seconds. Of course, there are some exceptions out there, like very exotic countries like Nigeria. We can still offer same day. So it's significantly faster than the traditional banking rails. But as I said, 95% is delivered under half a minute.
And it would then, in your case, I guess, be travel intermediaries paying through you to, in this case, for instance, an airline.
Correct.
Yeah. Okay.
It's for the second leg, us using our rails to get the supplier payment done.
Yeah. We have a couple of minutes, so let me just quickly check. Ben, and this was for you, Suby, which stablecoins are the best for airline use case?
USDC.
Okay. And I guess best here is most robust and most easily available, or?
So we need to understand also the stable coins, like how they are backed up. For example, let's say for US dollar, there is USDC and USDT. So USDC, whomever is issuing it, I mean, in this case, it's Circle, they hold exact amount in the bank. So that means it's kind of secured. But as of I know, USDT, they might invest in other money markets or whatever. So it depends. But in my opinion, USDC is much more better compared to USDT. if you want to make sure that the underlying money is not invested, it's
Yeah.
just held in
Yeah.
the bank account with an equivalent amount. So
Yeah.
it's your choice
That-
at the end.
Yeah, I think we see a trend that in some parts of the world, I'm not mentioning any names, that regulations are being loosened, right? So in this
Yes.
area. So I think do your homework and make sure that at least you tick the box from a sustainability perspective and risk perspective, because what might look like a quick win, might end up
Yeah.
being
So
a big loss, right?
So basically, you need to check how they, of course, these are regulated, but still you need to check how they are holding that money. Are they investing? Are they allowed to invest? Or they are just holding it as a
Yeah.
fiat currency in the bank account?
Yeah. Okay. Good stuff. Thank you so much. I think this was it. We're out of time, and maybe first of all, I would like to thank my guests for today. So thank you so much, Merusha, for joining, and Diego and Koert as well. Good to see you, and hope to see you soon at another event. And maybe Suby as a sponsor, as the company that made this webinar series, at least this first season, possible. Maybe any final words from you?
Yeah, I mean, it's been great to go through different types of travel payments and bringing a lot of experts. I'm really thankful to all of that, and Paul being coordinated all these efforts. And I hope it's been useful to educate and to get some latest news and to make some smarter decisions in your payments journey.
I think that's a very nice way to wrap it up. Thank you so much, all, and look to see you soon. Thank you. Bye-bye.
Thanks.
Thank you.
Thanks.
Bye-bye.
Thank you.
Take care.